Hold on to your hats, folks, because the market is on fire. The Dow, the S&P, the Nasdaq, they're all surging higher after the US and China finally decided to play nice. That's right, the trade war that's been looming over the global economy like a dark cloud, it's finally starting to dissipate. This isn't just another day on Wall Street, this is a seismic shift. We're talking about a potential turning point for global trade, a beacon of hope in what has been a tumultuous period for investors. The news of tariff cuts sent shockwaves through the financial world, igniting a rally the likes of which we haven't seen in months. Remember all those sleepless nights worrying about trade tensions and economic slowdowns? Well, it's time to put those worries to rest, at least for now. This is a moment for celebration, a time to revel in the power of diplomacy and the resilience of the market. But hold on, don't get too comfortable just yet. So, what exactly did these two economic titans agree on? Let's break it down. The US has pledged to significantly reduce tariffs on a wide range of Chinese goods. We're talking about everything from electronics and apparel to machinery and agricultural products. In return, China has promised to ramp up its purchases of American goods, particularly in sectors like agriculture and energy. This is a win-win for both sides, and the market knows it. This isn't just about easing trade tensions, it's about unlocking a wave of pent-up demand and unleashing a torrent of economic activity. Think about it. Lower tariffs mean lower prices for consumers. That means more money in your pocket to spend on the things you want and need. And what happens when consumers start spending again? Businesses boom, jobs are created, and the economy starts humming along like a well-oiled machine. The market's reaction to the tariff news was nothing short of electric. Futures for the Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq Composite all shot up like rockets. We're talking about gains so substantial that even the most seasoned Wall Street veterans were left speechless. This isn't just a knee-jerk reaction, folks. This is a sign that investors are finally feeling confident about the future. They see the tariff cuts as a sign that the worst of the trade war is behind us, and they're eager to put their money back to work. And who can blame them? When the market smells a winner, it piles in with everything it's got. But it's not just the big indices that are celebrating. Individual stocks across a wide range of sectors are also enjoying the ride. From tech giants like Apple and Microsoft to industrial behemoths like Caterpillar and Boeing, everyone's getting a piece of the action. This is what a true market rally looks like, and it's a beautiful thing to behold. Section 4. Winners of the trade war. Truce sectors poised for exponential growth. While the entire market is basking in the glow of the tariff cuts, some sectors are poised to benefit more than others. Let's start with technology. The tech sector was ground zero for the trade war, with companies like Apple and Qualcomm facing the brunt of the tariffs. Now, with those tariffs easing, the tech sector is set to roar back to life. Next up, we have the consumer discretionary sector. Lower prices on Chinese goods mean consumers will have more money to spend on things like cars, clothes, and entertainment. This is a recipe for big gains for companies like Nike, Starbucks, and Disney. But it's not just about tech and consumer goods. The industrial sector is also set to get a major boost from the tariff cuts. Companies like Caterpillar, which rely heavily on Chinese demand for their construction equipment, are breathing a huge sigh of relief. And let's not forget about agriculture. China is a massive market for American farmers, and the increased purchases promised in the deal are a godsend for the agricultural sector. Section 5. Trickle-down economics. How tariff cuts impact your wallet. Now you might be thinking, that's all well and good for Wall Street and big corporations, but what about me? Well, here's the good news. This isn't just a Wall Street story, it's a story that's going to impact every single American. Remember those lower prices we talked about earlier? Yeah, those are going to start showing up on everything from your next smartphone to your kid's new pair of sneakers. Think about it. Lower prices for everyday goods mean more money in your pocket. That's money you can use to pay your bills, save for the future, or even treat yourself to something nice. It's a win-win for everyone. But the benefits go far beyond just lower prices. A stronger economy means more jobs, higher wages, and a better standard of living for all. It means more opportunities for your children and grandchildren to succeed. This is what happens when nations work together instead of against each other. Section 6. Market euphoria or irrational exuberance. The looming risks. Okay, I've painted a rosy picture so far, but it's important to stay grounded. While the tariff cuts are undoubtedly good news, it's still too early to break out the champagne and declare victory. The market's reaction has been euphoric, but we need to be careful not to get caught up in the hype. Remember, the stock market is a fickle beast, and what goes up can just as easily come down. The truth is, there are still plenty of risks and uncertainties on the horizon. The trade deal is far from a done deal, and there's always the possibility that tensions could flare up again. We also need to keep a close eye on the Federal Reserve's next move. Will they continue to raise interest rates? And what about inflation? Is it truly under control, or are we headed for another spike? These are all factors that could derail the market's rally, so it's important to stay vigilant and not let your guard down. Section 7. Staying ahead of the curve. What investors need to watch next? So, what's next? What should investors be watching for in the coming weeks and months? First and foremost, keep an eye on the news flow coming out of Washington and Beijing. Any signs of renewed trade tensions could send the market into a tailspin. Next, pay close attention to upcoming economic data releases, especially inflation reports and the Fed's policy statements. These will give us clues about the future direction of the economy and the market. Finally, don't forget to do your own research and stay informed. Talk to your financial advisor, read industry publications, and keep your finger on the pulse of the market. Knowledge is power, and in the world of investing, staying informed is the key to success.